Welcome to Momentum Monday on a Sunday before Christmas.
I think it's our first Momentum Sunday.
Yeah, it's
well, it's a special edition. We'll try and get some people ready for what could happen next week. Let's get right to the carnage. Last week we talked about all the momentum was to the downside. So, did you try anything on the downside?
Yeah, I bought some a TQQ.
No, but did you hit any stocks on the short side?
Yes, Melly. I shorted Melly on Friday, and I shorted Etsy,
which I've owned for a while. Let's see how bad it is. Like right now, they're coming for everything.
Okay, so now you should be able to see my my screen, right?
Yep.
I mean, let's take a bigger picture look. And last week was, ever since we broke that 260 level, which was support for so long, like we spent 7 weeks in that 260 range, and then we broke last Monday, and then from there it's been just.
We gave back a year and a half of gains in the last couple months.
Relentless sell-off every single day, and if you look at market breadth, the ratings are extremely oversold. Like they haven't been that oversold since January 2016. Like currently only 1% of the S&P 500 stocks are above their 10-day moving average.
1%?
Which is 5 stocks, and they're all utilities. And
those 5 stocks you should short still. So hang on. I'm looking at this chart. This is the weekly chart of the S&P. I think people need to give themselves a break here. Obviously, bad things happen when the market's below the 200-day. For about 2 months, we've been talking about this as the market zigzagged. So the warnings were there. Now we're in a crash. Like that weekly bar on the S&P is something that you'll rarely see. What is that? 10% weekly bar?
Almost 10%. I mean, let's call it 8-9%. Yes, it's
last 3 weeks.
Emotional selling somewhere in between. And as I said, market breadth is so oversold that.
But they're literally in no man's land. Meaning, what I was going to tell people is, do you really want? I'm saying in an uptrend, you could hold your nose and own some of these companies. In a oversold market, you have to really. I call myself nibbling Lindsay, and I've been wrong about Apple and a few of the big names that I've been buying for myself. But it takes, a special when the indexes get this oversold, none of the signals are working. So you only have to be wrong a little bit, as it's happened to me before, where I've been wrong a little bit and you still lose a fortune. So let's talk about game plan. There's no reason to look at the SL50 because there's just no moment. All the momentum's to the downside. So let's look at if they're going to come for companies to get us into this. I mean, we had a whoosh. Last week was a complete whoosh, but yet nothing happened. So if we looked at a couple of the leading stocks, Amazon, for instance, if people want to get out, this is where they're finally going to leave. If we're going to give back the June gains, if they're going to go take, if the panic and the institution says sell whatever's left, because Ivan, if we go back to the S&P weekly. All right, so we're back at March, April, May, June of 2017. So what you'd want to go look, if there's any last bit of selling here that goes with the indexes, I think you'll start seeing some of the bigger cap names hold up. but I think you'll start seeing the momentum guys gun for the leaders. So let's take a look at Amazon. I missed this Friday. I talked about it and I didn't put the trade on. If we're gonna go back to the mid 2017, you're looking at 1,100, $1,000 on Amazon. Let's go to Microsoft. Yeah, you're looking at, you know, the 80s, uh, high 80s, low 80s in a washout. So what does that do to the indexes? I don't know. But what's surprising is usually it's the stocks that break down and then the index follows. So we still have a lot of stocks you could shoot for. I was looking at Shopify and I'm like, there's no reason they won't take this stock down into the 80s. You know, I was selling some of my Shopify on Friday, anything that I had left, because what's the point of riding it down $40? I'd rather, wait for the market to firm up. So Friday I was in a position of, like, even though I was nibbling on Apple, I was selling anything that I had left because in this type of market, there's no support. Apple was one of the first to lead with the S&P. So I think at some point in this next sell-off, Apple will start to drop less before we get this turn. So I think if we're going to have, what I'm trying to do is figure out what to watch on Monday in case I want to put on a trade. And it feels like Shopify, Amazon, you hit Etsy, Ivan. Let's take a look at Etsy. Yeah, you're right. So Etsy, been one of the strongest stocks. That was a nice trade. I mean, I guess you can see it back in the 30s quickly, and so that'll be another one they'll come for. Now, again, if the market rallies straight from Monday, Etsy, Microsoft, Amazon are the stocks that are going to rally. Let's take a look at the trade desk, which was another leader.
Keep in mind that the market is open only for half a day on Monday, and there's not going to be a lot of volume.
The market's only open half a day Monday too, huh?
Yes.
And is it closed Tuesday?
It is closed on Tuesday for Christmas, so it reopens on Wednesday.
So really, nothing should happen tomorrow except selling. So it's going to be a nothing day tomorrow. So really, people are gonna have to position themselves till Wednesday. So again, I'm looking at trade desk and I'm going, shit. You see the stock in the 60s. So again, I think you have to be prepared and have a game plan. You say you were buying TQQQ. Talk about how risky that is and why I've traded.
And that's why in this market you have to be very small and very nimble. And
remember, go to zero, can they not? Because you're trading triple leverage.
Yeah, they can totally go to zero. It's no different than the XAV. If the Qs go down more than 40-50% in a day, theoretically, it can be closed.
30%. They can shut this down. So I'm saying I'm just saying, if you have capital, stay away from these and focus on the actual indexes. So you got to remind people. I know you mentioned that ticker, and I talk about it sometimes for trading intraday, but as we've learned, you can't hold these overnight. Very risky. Especially if you have capital. There's no reason to do that. So with the NASDAQ, we're in no man's land, so anything can happen. Nothing. There's no support. We have oversold. We have people panicking all weekend. If Monday's bad, they're going to have, they're going to come. The conditions are set for some sort of rally next week in the first week of January, but it's very
are set for a big move in either direction. I mean, as traders, we have to think in different scenarios, and the two most likely scenarios here are for either a big snapback, like 5-6% snapback and mean reversion, or a quick washout, 5-10% washout. Both of them are, I would say, equally likely because we are so oversold. Market breadth is so oversold, and the indexes are back to potential support levels that if we don't bounce here, like the likelihood of a flash sale, it's very high, I think.
Yeah. So again, like even though Amazon may be cheap at 1,200, it can see 800. And this is just, people waking up and selling. Remember, ETFs, people have to do what, the ETFs have to just deal with their orders. I think what we're seeing is what I'm saying we can see is traders eyeing three or four companies that haven't been hit and just hitting them. And Amazon, we started to see that Friday. It's people realizing shit. If the S&P is down 20%, why isn't Amazon down 50%? And so they're kind of like catch up trades. They're very hard to catch. If you kind of momentum short them, these are the ones that'll turn the fastest. Yeah, Facebook already has played catch up. Apple. These were all the easy ones that were, to sell. Amazon, Etsy, the Twilio would be another one. TWLO. They will come for these with reckless abandon if they can.
They already did last week.
What's that?
They already came for them last week. I mean, all the stuff.
They started. I'm saying these stocks can't be supported that well, and they'll really come for them because again, like if the market turns, these are the ones you want to own, and there's not that many that you want to own right now. But there's also that chance because they've already come for the indexes that they'll just come take these down 20, 30% at the open. And so you got to be careful. I did more selling of old profitable positions to buy some Apple, and I actually bought some Facebook. And then next week I plan to do a lot of averages. If we get into it, I'm going to start buying some averages. I did buy some Facebook. It doesn't look good. But at the same time, I don't know how much worse news can come out about a company than what we're seeing. One that I thought was interesting was Equifax, EFX, on the short side. They're taken to task. They're taking attack Facebook on data, and if you look at it, Equifax is just starting to breach the two. I mean, this is a company that I see the world has no need for in a world where we're arguing about Facebook. So I can see, if we look at Moody's, Equifax could easily be down in the 40s, and so personally, I may short a little bit of the stock just as a personal below, right in here below 90. I may add a few shares with the stop above, 100, 105. If we look at Moody's, another one. It already did break down. So here's it was just such a fast market. I was looking anything where people don't trust from the last. These are big give backs. You're talking about a year, 2 years of price give backs. This is not going to heal very fast. Anything else that jumped out to you, Ivan, for momentum?
Well, at this point, correlations are super high. So, I mean, if you're long, just buy an index. If you want to be short, you can just go with any of the momentum stocks that haven't broken down yet. Anything that is still above its 50 or 200 day. I mean, that's why I can say correlations are so high that equity selection is not as important as being nimble, being small, and being willing to turn on a dime in this market. You have to be very flexible.
Yeah, I have to think that there's always a caveat. The caveat this time is just the leadership is not in sync to really understand how to stop a panic, because it feels like I make fun of Fat Nixon all the time, but it feels like nobody's on the same page. You felt during the financial crisis that they were working towards a plan. It feels like, I look at Trump and I go, it's kind of like that. There was a game when we were kids called, it's good to have the term Splunk up here. There was a game called Kerplunk, and that game was you pulled out a straw out of a piece of out of a the game was to have as few marbles in your side as possible. And there was always that kid that just pulled out all the straws and wanted to hear the sound of all the marbles crashing. And it feels like we have that type of leadership, right? Where who cares about the stock market unless it's working for me? Once it's not working for me and everybody's out to get me and out to get the stock market, let's see it crash and burn and start again. So I think you have to be, I think that's, it's crazy to say that, but I think we have that kind of, uh, we just don't know what's happening. And stocks are not bonds. Stock people can move stocks much easier than the bond market, and stocks just don't matter in the scheme of things. And if we look at the bond market, things are happening a little more normal. People are rushing to safety. Do we see that, Ivan?
Yes, people are rushing to US treasuries. I was going to mention that the main reason behind this sell-off is also connected to corporate high yield bonds. Because as you can see, last week that HYG, which is the high yield corporate bonds
Yep.
ETF, it was
That's
their biggest loss since uh, late 2015. Remember when oil was crashing and when many oil companies and
Yeah,
regional
now we
banks
have
were
oil and stocks crashing, so this can get a lot worse. So I think a lot of smart people are just sitting on the sideline in treasuries, and trust me, that can go on a lot. Granted, there'll be some rally. Woo! So that's the oil fund just getting.
so it's really important for oil to hold and kind of rally. So, so the high yield corporate bond index can also stabilize. Because if those two don't bounce, I don't think we can trust any rally in the stock market.
Yeah, this
So
is
all
just
markets are connected.
the markets are connected. The bond markets rule. The U.S. dollar, for some reason, continues to be strong, and people have to be aware that that shoe is going to drop at some point. Um, People hiding out in the U.S. dollar, but let's be honest. Uh, if that comes unglued, a whole nother set of trends begin. So short week, a lot of panic. Um, gold's somewhat of a safe haven. I don't care. I mean, cash and treasuries are your safe haven. Um, and I think trying to game when a bounce will come is really for a special few. If you see some washed out stocks like I'm seeing Apple and Facebook, don't expect them not to go lower. But at the same time, I think for whatever reason, uh, we have to see those stocks stop going down. Apple, we have to, you have 250 billion in cash, companies trading at 3 times cash. Um, you know what I'm saying? Forgetting everything you want to say about Apple, they have 250 billion in cash. So um, we need to see this stop going down. We need to get some stability in the behavior in the White House, which we don't seem to be getting at all. And until that happens, um, I would be very careful. Would you agree?
I agree, and I mean, I would end with don't be a hero. I mean, last week I read a really interesting article by Dr. Brett Steenbergen, and he said that bottoms are not made by declining selling; they're made by strong buying. So you don't need to rush in and just buy weakness. You can just wait and see a strong up day, like you want to see like a 3-4% up day, 1,000 stocks being up more than 3-4% before you enter even if it's for a short-term trade. You don't need to be a hero. The market will give you a sign when sentiment turns.
Yeah, but we are in a. I mean, if I look at Apple, I go, "This is a bear market." We're back to um, when the market's willing to sell the best stocks off, and then that's some good context there, Ivan. I mean, if you look at Apple in the scheme of things, giving up a year of gains, um, 132 is that previous high. So you're still 10% above a true level where people say, wait a minute, we're back on a 3-4 year trend and the company has 250 billion in cash. I think real buying, like I'm talking about, Buffett coming in and saying, uh, interrupting a commercial break and taking out a full page ad about Apple. But I think you're in the 130s before he does that. I'm not saying he's not buying right now, but I'm, in the 130s, he steps up and goes on CNBC. So, and if it's 10% more for Apple, what does that mean for the market from this distress level? So I'm saying, listen, I'm buying Apple because, I don't have a lot of stocks that I own right now. And, I own some Nike and they defied the market. Will the gains hold? I don't know. Nike, you would think that below 67 where it closed, it could get ugly. So that was one where kind of the sell signal came, it's one of my 8 to 80 stocks, I'm holding it and it's hanging on by a thread. I had a good Friday, but I'm going to do some selling and repurposing. And if that means buying some Apple and Facebook and some of my other favorite brands as this market drops, or just the NASDAQ in general, I will. So right now you've got to really be on the defensive, own companies that you think you can ride out in a bear market, or keep 50 to 60% level cash. There's nothing wrong with that. And wait for us to see some leading stocks breaking out. But there's nothing wrong with being at least 50% cash and truly just trimming your positions, because if we're going to drop another 20, 30% over the next year, because we are in a bear market. I've been pull up, if you can, and I want to pull up Michael Batnick's latest post. Irrelevant investor. I think people should see this. Yeah, this is really good. If we scroll down to the last chart, scroll down to the last chart. Keep going. Keep going. Yep. Yep. No, I've just scrolled back. One more. Yeah. So these are we've had 15 bear markets, and let's be honest, we're in one. Okay, unless something miraculous happens, but we still mathematically are basically in one, according to the terms of what a bear market is. And you can see the darkest red line is the current one. Only if you look at the crash of 87, that was obviously a very short one, but you can see it was double the size. So if we are in this bear market, I think we are. You have to, consider how many, half a year to a year of pain of just gut wrenching, both volatility and drops to get us into the average length of what a bear market is. So to me, it's more about time at this point. Are we halfway there? Are we a quarter of the way there? Are we 3/4 of the way there in price? I don't know. But historically, we're looking at another half a year of just a difficult environment. Now, again, these are just 15 samples, but a lot of psychology is baked into 15 bear markets. Now, the world is networked. People are I don't know if that's good or bad, but the world is networked. So there are different overlying macro factors on a bear market in terms of communication and global markets. And so every bear market's going to look differently, but you can just see from a time perspective, when the bear hits, you can see that, we're just getting into it. And so patience, you got to have some context. And hopefully this chart, turns out to be the only time you have to look at this chart, and we go off and start seeing stocks bottom, and in a couple of months we start seeing stocks break out again. And but that's just not usually how it goes. And if I look at that S&P chart, I don't know what it's going to take. at least a year or two to heal that damage.
Yeah, I mean, keep in mind that the stock market is forward-looking, and currently it is discounted for recession.
Yeah, no, the recession's now.
It will expect actually the economic numbers to confirm it at some point. And if they don't, we'll see a tremendous rally back.
Right. If there's no recession, this thing will rally back and we'll have another V, because it's starting to price in all kinds of craziness. But at the same time, having rarely seen a move this quick from an all-time high in a market, in an actual S&P, other than the NASDAQ in 1999 or 2001. But to see them move this quickly in the S&P from all-time highs, it's definitely, and now the NASDAQ too. I mean, they're coming off such great runs over the last 10 years if we go and continue, you know what I mean? But they're still massive, massive runs. I think it would still be 30, 40%. You'd be above the all-time highs, from 2001. So there are some interesting data points of where you'd have to get super excited, the 100 to 120 mark on the NASDAQ. But that could take a year to get to work its way down there. Or that, if you have to be prepared if that happened in 3 months, great. But sometimes that could take a year or two to play out. And so it's a game of attrition. So anyways, got to know your field position. But in looking at that S&P weekly, what scares me the most is that is the actual technical. And if we go to the weekly, I haven't, and the monthly, but if we're kind of in no man's land, and we're in this space where what nothing's super cheap. The value stocks continue to just plummet, and the growth stocks, it's hard to get them. They didn't matter the valuations, but when you're trying to buy stuff in a downtrend, what are the valuations are still crazy. So anyway, that's it. Not to beat a dead drum. Hopefully it's a Merry Christmas for everybody, and and you've kind of heeded some warnings and got to the sidelines, but I think it's never too late to really just kind of backpedal and make sure you have enough capital, because there's going to be some great opportunities when this ends. And so you just want to keep your powder dry for good risk reward scenarios. Ivan, have a great rest of your trip.
Thank you, Howard, and happy holidays to everyone.
Okay, well.